What if the next bull run doesn't start when everybody feels confident, but when the data starts improving before the crowd believes it? Because that's the part most people miss. Bull markets don't usually begin with euphoria. They begin with disbelief. They begin when sentiment is still fragile, when people are still expecting one more drop, when headlines still sound cautious, when most of the market is waiting for confirmation instead of positioning early. And that's what makes this moment interesting. Because if you zoom out and actually look at the data right now, the picture starts to look very different from the way people feel. Right now, the crypto fear and greed index is sitting at 16, which is still firmly in extreme fear territory. And just recently, it was even lower, around 12. That tells you something important. The market is not in a euphoric state. It's not overheated. It's not full of reckless confidence. People are still cautious, still defensive, still skeptical, still waiting for proof. And historically, that matters. Because real moves often begin when positioning improves before public confidence catches up. That's how early trend shifts happen. Now let's look at structure. Bitcoin is trading around $70.9 thousand. The total crypto market is sitting around $2.49 trillion. And Bitcoin dominance is roughly 57%. That's a major signal. Because when Bitcoin dominance stays elevated, it means capital is still concentrated in the strongest and most trusted asset in the space. In other words, the market is not blindly rotating into low-quality speculation yet. It's choosing strength first. And that's usually how cycles begin. First, Bitcoin absorbs capital. Then Ethereum begins to follow. Then once confidence builds and risk appetite expands, capital starts rotating into higher beta altcoins. So when people say alts haven't really exploded yet, that doesn't necessarily invalidate the move. In fact, it can suggest we're still in the earlier part of the cycle, because late cycle behavior looks very different. Late cycle behavior is when everything is running, when low-quality coins start flying, when the market gets noisy, when leverage gets excessive, when sentiment gets greedy, when people stop asking if the move is real and start assuming prices only go up. That is not where we are right now. Now let's talk about institutional demand, because this is where things become harder to ignore. Spot Bitcoin. ETFs have now pulled in around $56.8 billion since launch. And more recently, we've still seen meaningful inflows on stronger sessions, plus $471, 4 million plus $358, 1 million plus $240, 4 million, that's roughly plus $816, 9 million in just 5 days. That is not retail hype. That is not social media excitement. That is large capital allocating through regulated products. That is institutions positioning. And that matters because large capital does not usually move based on emotion. It moves based on expectation, structure, liquidity conditions, risk-reward, and long-term portfolio positioning. So when you see Bitcoin holding structure while institutional demand continues to return, that's not something you dismiss lightly. Now let's zoom out to macro. Because crypto doesn't move in a vacuum. Rates are still sitting around 3.50% to 3.75%. So this is not a free money environment. This is not the kind of backdrop where liquidity is flooding into every risk asset without resistance. And inflation is still part of the story. Recent numbers came in around CPI, 0.9% month-over-month, 3.3% year-over-year, core CPI, 0.2% month-over-month, 2.6% year-over-year. So let's be honest, conditions are not easy. This is still a market dealing with uncertainty. Inflation is not fully gone. Policy is not fully loose. Risk is not fully priced out. But here's where the shift starts happening. Markets don't wait for perfect conditions. They move on expectations. They move when participants begin to believe that the worst pressure may be behind them. They move when the probability of easing begins to matter. They move when the path ahead looks less restrictive than the path behind. Right now, there's roughly a 1 in 3 chance of a rate cut by December. That's not wild optimism. That's not euphoric pricing. That's cautious positioning with upside potential. And that's exactly the type of setup where early trends can form. So when you put all of this together, the broader market picture starts to look like this. Sentiment is still fearful. Bitcoin is still leading. Institutional money is still coming in. Macro is still tight enough to keep people cautious. That is not late cycle mania. That is the kind of environment where early positioning starts to matter. Now, this is where the conversation gets more interesting. Because once Bitcoin begins to lead a move, the next question becomes, where does capital go next? Because capital never stays still forever. Once Bitcoin establishes leadership, market participants start looking for the next phase of upside. Then Ethereum becomes the next obvious checkpoint. And after that, attention starts shifting toward assets with higher upside, stronger narratives, and room to re-rate faster if the cycle continues. That's where higher beta plays come in. And one name that keeps coming up more and more in that conversation is SUI. Now, let's be clear. SUI is not interesting just because it's a layer 1. Every cycle has layer 1 narratives. Every cycle has new chains promising speed, scale, and better user experience. So the question is not, is the tech good? The real question is there actual traction? Is there real usage? Is capital beginning to care? And does the market still see enough asymmetry for it to outperform if risk appetite expands? That's the real framework. And when you look at SUI through that lens, the story starts to get more compelling. SUI is showing real traction. Around $1.01 billion in bridged TVL, around $516 million in stablecoins, around $341 million in 7-day DEX volume, around $84 million in 7-day perps volume, and over $1 trillion in stablecoin transfers. That's not nothing. That's real usage. That's real capital movement. That's a network beginning to show measurable activity. And that's important because markets can forgive a lot when real usage starts backing the narrative. SUI also sits in a very interesting position from a valuation perspective. The token is around 90 cents. The market cap is around $3.56 billion. And circulating supply is roughly 3.95 billion tokens. So what does that mean? It means SUI is big enough to be credible, big enough to attract serious attention, big enough to matter, but still small enough that if the broader market expands and capital starts rotating harder into high beta names, it can move much faster than Bitcoin. And that is exactly why traders and investors start looking at projects like this once Bitcoin and Ethereum establish the direction. Because if Bitcoin gives you strength, higher beta altcoins give you torque. But now let's add the other side of the story, because this is where many people get sloppy. SUI is not a guaranteed winner, and it is absolutely not risk-free. In fact, some of the biggest risks are exactly the ones that people ignore when the narrative gets hot. For example, only around 39.5% of supply is unlocked right now, and the next unlock is scheduled for May 1st, 2026. That matters, because unlocks create real supply pressure. And when they're cliff-based, that pressure can hit the market harder and faster than people expect. So even if the ecosystem is growing, even if the chain is gaining attention, even if the narrative improves, price still has to absorb dilution. That means tokenomics matter. And this is why serious positioning has to be different from blind hype. Because a good narrative without good timing can still hurt you. A strong chart without liquidity can still fail. A good ecosystem with bad token dynamics can still underperform. So the bullish case for SUI is not based on emotion. It's conditional. It depends on the broader market continuing to support higher beta expansion. The bull case looks like this. Bitcoin holds structure. ETF inflows continue. Macro stabilizes or at least stops getting worse. Risk appetite expands. Ethereum confirms strength. And then capital begins rotating into strong, high-upside ecosystems that still feel early. In that environment, SUI becomes a very interesting candidate because it has narrative potential, ecosystem traction, visible on-chain activity, and enough room to expand if the cycle broadens. But the bear case is also very real. If Bitcoin drops, If ETF flows slow, if inflation stays sticky, if rate cuts get pushed out, if liquidity tightens, then high beta names like SUI generally get hit harder. That's the trade-off. Higher upside comes with higher fragility. And this is exactly why understanding cycle structure matters. Because if you know where we are in the sequence, you stop looking at these assets emotionally. You start looking at them probabilistically. You stop asking, will this definitely explode? And you start asking, if the cycle continues, which assets are best positioned for the next rotation? That is a much better question. And right now, SUI is one of the names that clearly belongs in that conversation. Not because it's guaranteed, not because the market owes it anything, but because if this really is the beginning of a broader expansion phase, SUI looks like one of the more interesting high beta setups to watch. So the real question is this: if this is the beginning of the next major move, are you positioned in the assets that benefit most from the second phase of the cycle? Because the biggest opportunities rarely appear when everything is obvious. They usually appear when the data is improving, the leaders are holding, capital is quietly positioning, but the majority still doesn't fully believe. And that might be exactly where we are right now. Now, before you do anything with that information, let's make one thing clear. This is not financial advice. None of this is a recommendation to buy, sell, or allocate capital into any specific asset. This is simply my own market analysis based on current data, price structure, macro conditions, market sentiment, institutional flows, tokenomics, and sector rotation. Crypto is a high-risk, high-volatility market. Even strong narratives can fail. Even good setups can break down. Even assets with real adoption can experience deep drawdowns if liquidity shifts or sentiment reverses. So always do your own research. Look at the charts. Look at the on-chain data. Look at the token unlock schedules. Look at circulating supply, market cap, ecosystem growth, capital flows, and macro conditions. And most importantly, manage your risk. Manage your position sizing. Manage your entries. Understand the downside before you focus on the upside. Never invest money you cannot afford to lose. And never confuse conviction with certainty. The goal is not to chase hype. The goal is to make informed decisions before the crowd fully understands what's happening. And if you want to stay ahead of this market instead of reacting after the move is already gone, then you need to be plugged into the right ecosystem. That's exactly what Golden Bull is built for. Golden Bull isn't just another Telegram group posting random charts and noise. It's built to be the ultimate Telegram hub for universal crypto development, a full ecosystem designed to help you understand the market, track the narratives, improve your analysis, and stay positioned as the cycle evolves. Inside Golden Bull, you get daily crypto news and market analysis, so you're not relying on headlines after the move has already happened. You get the stories that matter, the macro updates that matter, the on-chain shifts that matter, the sentiment changes that matter, the capital rotation that matters. Not just noise, not just hype, not just random tweets with no context. You get structured breakdowns designed to help you understand what is actually happening in the market. And that's a major edge. Because in crypto, information is everywhere, but clarity is rare. Golden Bull is built to give you that clarity. You also get access to the calls group, where we break down high-conviction setups, key levels, risk zones, market structure, and the assets we're watching closely. This is not about blindly throwing coins at people. It's about identifying opportunity with context. What is moving? Why is it moving? Is it just narrative? Is there actual flow behind it? What are the risks? Where are the invalidation levels? What needs to happen next? That's the kind of thinking that separates noise from real positioning. And one of the biggest edges in crypto is understanding narratives before they become obvious. That's why Golden Bull focuses heavily on narrative analysis. Because by the time everybody is talking about a sector, a chain, or a token, a lot of the easiest upside has already gone. Inside Golden Bull, we track where attention is flowing, where capital is rotating, which ecosystems are gaining traction, which themes are strengthening, and which narratives are still in the early stages before the crowd fully catches on. That matters massively. Because crypto is not just about fundamentals, it's not just about charts, it's not just about macro, it's about the intersection of all three. And narrative is often the bridge between attention and capital. That's why getting ahead of narrative shifts can be one of the biggest advantages in the entire market. Then there's Golden Bull Academy. And this is where things go even deeper. Because making money in crypto is not just about catching one good move. It's about developing the skill set to navigate the cycle again and again. Golden Bull Academy is designed to help people build that foundation. That means deeper education around market cycles, risk management, position building, macro influence, tokenomics, sector rotation, on-chain interpretation, and how to actually think through this market with more clarity and discipline. So whether you're new to crypto and trying to build a real framework, or already active in the market and trying to sharpen your edge, Golden Bull Academy is there to help you level up. On top of that, there's also the Golden Bull News channel, giving you a direct stream of important market updates so you can stay connected every single day without having to filter through endless noise on your own. That means you stay informed, you stay current, you stay aware of what's developing in real time. And to keep you fully in the loop beyond Telegram, make sure you're also following on X, because that's where you'll get faster reactions, live commentary, additional insights, and real-time updates as the market evolves. So when you put it all together, Golden Bull gives you daily crypto news, daily market analysis, a call's group narrative breakdowns, Golden Bull Academy, a dedicated news channel, and X updates to keep you in the loop in real time. That's what makes it more than just a group. It's an ecosystem, a place to learn, a place to track the market, a place to understand narratives, a place to build conviction, a place to stay early. Because this market rewards the people who are informed early, who understand the bigger picture, and who position before the crowd. So don't just watch the cycle happen from the outside. Be in the room where it gets broken down properly. Join Golden Bull on Telegram. Follow on X. Stay connected to the news, the narratives, the analysis, and the setups that matter. If you want real-time breakdowns, real market context, and a serious edge going into the next phase of this cycle, Golden Bull is where you need to be. Telegram plus X, at your Golden Bull. That's where I post the updates, the insights, the analysis, the narratives I'm watching, and the assets I'm focused on before they become obvious to everyone else. Big things are coming. And if this cycle is really starting to build, you'll want to be early, not late.